All right, you guys hear me? Am I back? Yeah, you're probably right, Anthony. Edge is worthless. um, you guys hear me? It says I'm streaming. All right, I don't know. I'll get this figured out. I'm just gonna use Coinigy for now. It's a little slower. But the point I was gonna say here on BAT, I'm not gonna like this. This was the downtrend line. There were lower highs here, lower highs here. This is the area we got to get above right here on BAT. Lower highs, lower lows. I mean, here you failed to make a lower low. Nice bottoming tail. Higher low, higher low. So this is going to be the key pivot. We get above here. We can go back up into, I mean, this is a double from here. You get back above 6.5. You can easily go back to these highs up in this area. Let's see, Bitcoin Cash. It's been kind of lifeless ever since it had this initial little consolidation period. It took off. Everybody thought it was going to be the next Bitcoin, and then it's just collapsed again. As long as it's still above, I don't know where's the brush. This is useless. I don't get it. I really don't. I don't have this downloaded on there either. Anyway, guys, let's just do this tomorrow. I mean, it's the simplest thing in the world, 2017, and nobody can put together a simple annotation. It's the easiest thing on an Apple, and then Gates is too busy trying to run around Africa and save the world, so I don't know what the deal is. But I'll get it figured out, guys. Guess we could talk maybe about Euro. This is what I've been saying on the Euro. This is pretty big. So this monthly cycle is pretty high here. And the call was Monday that we got to watch this pie line right here. You can see that. So this is the monthly chart. This green line is the pie line. It was the low in 2010. It was the low in 2012. And then you come all the way across over here. This big move down in 2014 was an amazing downtrend. This bear market was just so momentous. That was a lot of good trading right there. And then we've still been in this bear mode, making lower highs. And I don't know if you guys can see right here, the bands though is right where we failed. We basically failed right into pi here. So I'm kind of thinking that August is going to be the turn, and this cycle is going to head back down. So that's my call, that the euro high is in right now. The dollar low is in. If you go to the weekly chart, here's pi on the weekly level. So we got through the 200. This tends to happen too because everybody uses the 200, and there's a lot of bad strategies where people want to be bullish if you're above it and bearish if you're below it. And as soon as you cross the line, literally traders are trying to go long and short. But what they fail to take into account is that this line is descending. So I care more about the direction, not whether you're above it or below it. So this is still in long-term territory where we can turn the corner and head back down. But I like this topping tail. Let's see if we can finish the week like this. You can see that the weekly cycle is starting to come down. And this is the same 5x3 setting I use on the other charts. You go to the daily level. I mean, this is a classic setup in our model, guys. This topping tail right here, it's just slow for me to move this stuff around. And when you take the low out right there, follow that swing line, you take the low out, that's a sell setup in our model. So we started a core short. I mean, I've been core short the euro, but I like being core short euro. I like being short euros versus the pound. Same thing going on here. Topping tail, taking out these swing line lows. Weekly cycles high, plenty of room to come lower. And then when we look at the dollar pairs, dollar versus Swissy, look at all these lows down here that we held. Wish I could draw. There's a lot of good stuff to show here. Look at these bottoming tails. Boom, bottoming tail, double bottom low on dollar Swissy. That's on the daily level. When you look on the weekly level, look at holding pi on the weekly level. This is the third week we've been down here and we held it. Okay, I'm not surprised. That's pi does a really good job. On the monthly, not much to show really on the monthly except for this cycle's low. So it might be time for us to go back the other way longer term. Dollar yen, same thing. Monthly cycle dollar yen is still room to come lower. It's been a little bit more bullish, so the yen has been a lot weaker versus the dollar compared to a lot of other pairs. You see this higher low. This is a much more bullish chart. Weekly level, it's pretty neutral. It's been in a sideways range trade, but we keep holding these lows right here. 108.5. So you can see it better on the daily, but we held that area again. Boom. So another bottoming tail yesterday. It's all signs that maybe the market wants to go the other way. I guess if we just even look at the dollar index, so after this huge rundown, 1, 2, 3, 4, 5, 6, 7 lower lows, I mean, we're due to change direction. And then right at 7 lower lows, boom, bottoming tail. Cycles low. Look at that, right into the 200. So I think that's the way to play it, guys, is you want to be dollar long like we held the lows from 2016 pretty much. You can draw a horizontal line. Boom. A lot of traders are going to have that. So big picture, I think that's the call. We want to be long dollars, short euros, and that's going to affect a lot of things in global macro. If you look at the 10-year, the 10-year yield was intraday was looking like, I'm sure there's a lot of guys sending Bloombergs out saying that, making calls that you're breaking down, but you poke through, probably ran a lot of stops, and then you close back above it. So I don't know, we have a 3% GDP number today. Inflation's already rolled over a lot. I don't really see why rates should be below 2% with 3% GDP. But the level to watch is exactly right here. I mean, it's kind of where the bands were. It also happens to be pi. So same thing right here. On a weekly level, this low matters, 209. Guess it's 210. 210 on the 10-year. Guys, look, I mean, how many charts do we just look at? Look at what, it's just an amazing thing. This pi line concept, I mean, we tagged it exactly, and I can guarantee you there's like 0 institutional traders that have that on their chart. Everybody is saying, oh, we broke this low, that's a trouble. So maybe we have dollar up and we're going to get rates up. If you get dollar up, rates up, you're going to see gold down. So the level to watch on gold is 1300. You got to have a topping tail there. Do you see how everything's connected? When you get these big picture changes in the markets, you're going to see the dollar do something, the euro do something, you're going to see rates do something, you're going to see gold topping tail. Let's just start with the monthly. No, that chart's not very good. Let's see if we can do the continuation. GC1. This should look better. This GC1 brings in futures roll. Okay, so here's what I've been saying on gold for a while. Man, I really wish I could draw. The bear market, so this is the high in 2011, commodities peaked. You guys, when you took this low out here at 1525, that was it. Bull market was over, and that was the call, the start of a bear market. But at least you had to be neutral. And then you just see these lower highs ever since. So that was a bear market from 2013 to 2016. And then right here, and you got above this level, I don't know, like 1185. That was the first sign that the bulls were doing well. This was a pretty good candle right here. And then once we got above the bands, you see how the bands, guys, are all laying on top of each other? That's so indicative of a neutral range trade market. That's why gold has really gone nowhere. I mean, it's just a sideways range trade. If gold's going to have another bull run, this is where it needs to get above. This is this high right here. Whatever level that is. 1382. You get above 1382, then I'll say that gold's in the new bull market. But right now, it's still going sideways. That's long term. When you go to the weekly, it's doing a little bit better. So 1300 right here. We did get above that on North Korea, missile launch headline. And as long as it's above 1300, there's room to come up here and test pi. That's 1350, 1380 area. This whole zone. This whole zone right here. All right. So I don't have a position on gold, but I'd rather be long. But we'll see if the dollar takes off and then rates kind of hold there at 210 and start to go the other way. Gold's going to struggle. You probably won't even get back up to these levels. You'll probably be back below 1200 if the dollar really rallies from here. Gold just hates dollar up and rates up. It just really struggles. So I'd be a seller up here. I'll be short gold up here if we get up there. What else do you guys want to look at? Guys, what's interesting on Bloomberg, this just tells you that the crypto market's still so early. You don't, what was I going to say? Here, you type in, the institutions aren't even, I mean, Bloomberg barely has anything on Bitcoin. They only have like 3 or 4 exchanges listed. You can get the Bitcoin chart, but forget about like the other altcoins and stuff. Look, they only have Coinbase listed. Kraken, I don't know this one. Bitstamp I've heard of, but it just gives you a description of what they do. We're still in that phase where institutions are just getting involved. There's a lot. Once the institutional money comes in, the market's going to go to a whole new level, whole nother level. Why is what, Anthony? Clan, you want to do cable? These charts are looking good, huh? Talk about a failure at the bands. Sterling's just still in a long-term bear market. This is Brexit here. We failed right at pi in the daily level. You do have a little bit of a wedge going on here. So there's no doubt there's astute technical traders that are watching that. You could draw, I mean, I like using the regression channels the best. Bloomberg has a really good one. I mean, that's your trend right there. Boom. That's your intermediate term trend, and this is your long term trend. So look at that, guys. That gives you, that's why I built the model. Multi-duration, long-term downtrend, intermediate-term uptrend. The market failed right where it should have long-term. This was a bottom. This is the top, bottom. So this is 2 standard deviations. So you guys see the red line? That's the mean. This gray line's 1 standard deviation out. Green line is 2 standard deviations out. And sometimes I'll eyeball a third standard deviation. I'll just manually draw it on there. I'll take this, like, I'll draw it parallel like this. And then I measure the distance and I'll move that to 3 standard deviations. But in statistics, there's something called the 3 sigma rule. So most of your data set is going to lie within 60% is going to be within 1 standard deviation. It's something like 89% within 2 standard deviations. When you get it within 3 standard deviations, it's something like 98% of the data will fall within 3 standard deviations. So that's why I like the regression channel with a standard deviation, because it's going to give you, at 2 standard deviations, you pretty much should set the risk range for whatever time frame you're looking at. So, when you get up towards 131, 132, that was the top of the range. Now down here at the bottom, towards 127. Yeah, the regression channel is nice. I was looking for that on Coinage the other day. I don't think they have it. They have a Fibonacci projection channel. I didn't really like it. I like this regression channel a lot. You can get it on, I think you can get it on trading. I guess it wouldn't be on TradingView. Like MetaTrader 4, I think, has it. I use it on Thinkorswim a lot. When you go to the daily level on the pound, cable's been a little bit more choppy lately. All right. So you kind of cozied up next to pi down here, but we broke the band. So to me, it's a little bit neutral. I'll be more bearish the pound if we break the lows from last week, because this is a pretty good pivot we created. But it's kind of neutral. It was bullish, couldn't hold the bands. I don't see a huge edge on cable. That's why we haven't even been trading Dragon, pound yen very much either. I guess overall I'm still kind of bearish cable since we failed up there at the monthly. Yeah, the fibs are, yep, for sure. Fractals, fib sequences. You guys want to do oil? Oil looks horrible. So bearish. It's been so technical and so cyclical this year. It's really been great. We've had some really good trades. I mean, we probably have like 85–90% of our signals have been on the money this year. This was our first one, was up here, short. We've just been playing this on the short side. I mean, look, here's your regression. There's your long-term trend. Pretty simple. Okay. So each time you get up here towards the top of the range, you want to think short. And then this has been the bottom of the range. These regression channels, don't think of them as level specific. I mean, like the last thing you would want to do is if you broke here, you start thinking bearish down here. I mean, no. These are areas, right? Like a chain link fence. Like you get thrown up against a chain link fence, it gives, right? Or a boxing ring. So these are areas. Here's the intermediate term regression. Right there. Short, cover, short, cover. I mean, it's just really bearish that we broke this low here, 46.5. The next support's down here, right here, 45.38, and then these lows, 43.73. But there's no reason why we can't go back in the low 40s. Oh, there's a nice 4-hour cycle if you guys want to look at the 4-hour. You can see how the wave formation's all down and bearish. So we took out these lows here, then the bottom fell out. Lower high, lower high, lower high, lower high. This kind of broke here. That was bearish. But this is where you want to be shorting, top of these cycles. And I'm still course short, a small piece. We sold a lot of these 4-hour cycle highs. The timing works, so it's just so much easier when you keep it simple with here. Right? So I was covering on the bottom of this cycle down here into this bottoming tail. And then I just have one piece I'm trailing out. I'm just probably let it go maybe in the low 40s. And I mean, if this comes back up, there's a pretty good wall here now on oil. So we like to use our wall concept. Whether you draw it from here or you draw it from here. So make that red. All right, halfway up that wall, it's going to be really tough for the bulls to take the market and knock all that wall down, knock all that bearishness down. It's just really difficult to do. Oops. So we like to start our trades short. If you're in a bear market, you have a big bearish wall, you want to look to sell about halfway up the wall. So we do this when we're day trading. You can do the same thing we did on the euro when we're making a big picture monthly call. Same thing, that big down move from 2013. If you make that one wall halfway up is right where the market failed this week, yesterday. So Fibonacci retrace, 50%. So for some reason, if you rally back 47.10, that's kind of where I'd start to sell. I'd want to time it up with the cycle. But that's part of how we trade. 47.10, I'd start to think about shorting again. I'll short more at the bands right here, the 618. Anyway. Yeah, silver. Yeah, man, we'll look at silver. I mean, what's great about our model is that we can apply it to any market, any time frame, any market. As long as I can chart it and there's data, it's all the same energy flow. It's the same patterns. It's the same rhythm, the same cycles. Silver is pretty similar to gold. When you look at the monthly chart, let's get the continuation out. So you had your peak in 2011 all over CNBC. Silver approaches 50, that was a high. I remember trading treasuries, watching that every day. It was silver, 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 silver. So anyway, same thing there. And once you went through 26, that uptrend broke right here. When you went through those lows, that broke what we call our TMS. And so 2013, when you went through 25, time to get out of your long. No longer did you want to be a bull. And then it's just been a lot of times, guys, when you break these bands here, you get a move to the 200. That's exactly what you got. So if you break the bands, you go to the 200 twice. So silver just checked up there again. Again, a lot of traders are going to have the 200 on there. So held the monthly. But you can see, I mean, we're still not in a bull market yet. So if Peter Schiff or any of these guys want to be, perma bulls on gold, I mean, they're always bearish on the dollar. They're always bullish on gold. I mean, gold hasn't done anything. Silver hasn't done anything since 2012, since 2013. And it's not going anywhere until you get above 20 now. That's the pivot, 2021. So it's still sideways. I mean, you're better off being long Bitcoin for sure versus gold. That's in a massive bull market. Obviously, everybody knows that. If you get on the weekly level, if you get above 1876, you probably will test that 21 level, and you got pi coming into the same area. But you see how the bands are all laying on top of each other? That's just pretty indicative of a range trade. So gold and silver are kind of lifeless. So I haven't really traded them very aggressive at all. I haven't touched silver in a long, long time. Daily just failed at pi, another example. So it's so cyclical, guys. Look, you move away from pi, you come back to it. You move away from it, you come back to it. That's the cyclical component of that average, because it's 314 units. So that's just the pi being 3.14. It's just a very cyclical number. That's why we use it. I call that my pi line. GDAPs. No, regression's different. Regression is just calculating the mean and how far out. Well, I guess you could say that. Bollinger Band calculates a mean and gives you a standard deviation, but that the bands will move with, there's like a volatility component into that. But that's a little misleading because sometimes you'll have the bands will get really close to the market, so it doesn't give you that 2 standard deviation channel. And the problem is, I mean, if vol is quiet for a while, that range will come down, which is good because it gives you the top of the range relative to the volatility. But I would rather know where the range is just in general. Like, I don't want it to blow through the top of the range just because last week was quiet. This week has more volatility. I just like to keep it simple. Give me the average of the price action and then set my ranges out wide. The Bollinger Band, just to me, it just moves around. It's helpful. I mean, I like to use it on a 1 minute. A lot of times I'll put that on the 1 minute chart for scalping and stuff. But like here, if you want to grab this price action, all right, that's done a pretty good job, right? This is high within the range. This was really low within the range, high within the range, getting pretty low within the range. I mean, just like gold, silver gets up here a little higher, 18 and a half. I mean, I'm a seller. I'd rather be short up there, especially if the dollar holds that area we talked about earlier. I don't even know if I can put the Bollingers on here. I forgot how to do that. Let's see. I don't know if this is going to work. I don't know what just happened. No, I don't know. That's weird. I'd have to mess with that. But if you put a Bollinger on here, most likely it's going to have, I can't draw, but it would have like the top of the Bollinger closer to the market down here. You'd have the bands in the middle of this range a lot of times. Anyway. I didn't see that about Goldman fifth wave, the Elliott wave, fifth wave, or are they just making up their own waves? Well, we can look at it. Let's see if I can remember how to get the. Let's see. For me, guys, I just like to count, keep it simple. I mean, anytime you're making, see, these are individual moves. Like this was a move, that was one move. This is another move. This is one move. This is the start of another move. So it depends on where you're drawing the wave from. You can pull it from this low. You can pull it from here. If you pull it from the beginning of time, I don't think that's very useful because these are totally different moves. This is 3 separate moves in here. This is kind of the 4th. Yeah, so is that what they're saying? This is 1, 2, 3, 4, 5. Yeah, I would agree if that's what they mean, 5th wave. First move up, 2nd, 3rd, 4th, 5th. I kind of think this is 1. I just kind of see this as 1. So I like to think in terms of this. You can see we're at the top of the range. I mean, you want to be taking some profit up here, no doubt. Doesn't mean, I mean, this is the most bullish market on the planet. So you're going to go, sometimes you're going to go 4 standard deviations, 5 standard deviations. I mean, I've seen 6, 7 standard deviation moves in treasury market. So it's definitely, I mean, this is why you want to be a buyer down here when everyone was freaking out. Now you take profit. I mean, we were buying down into 1850. And again, this is where you wanted to be taking some profit. So other than the fact that we just had a pullback and a little cup and handle here, if we can't hold above 4,400, then I would say you got to be a little bit cautious. If we break the 8 here, this pink line coming up, and you can't hold this breakout, then everybody that piled in long here, we could swing this back, maybe back to like 3,600, back down here. But this does kind of look like a breakout right now. This is a pretty healthy pullback here, this bottoming tail. So this could go higher. So there's your intermediate term channel. So I mean, I bought some more when we went through this high, and my risk is going to be below the low of this candle right here. But the top of the channel is closer to 5,000. That's going to probably be a magnet from here. Maybe go to 5,200. Then you're going to look pretty overbought at that point. I mean, this is a little bit far-fetched if you take all the data. I mean, this was a pretty focal point right there. Anyway, so a lot of lines. What's that, the clan? Sorry if I'm not saying your name right, the clan. I'll show you guys if this is helpful. That's the big picture. Just go to the 4-hour here, or the hourly chart. This is the pivot that you want to be concerned about right now until we create another one. 2 pivots right here. This one. All right. Oh, I think I can do a swing line here. This is good. These are 2 pivots that you really want to, and I would say that this breakout high. So the first sign that maybe this is just run out of there's no reason why you breaks out here that it shouldn't follow through. If it can't follow through, it's telling you something. And what I mean by follow through is it needs to make another move the next several days here. I mean, it could take its time and just go sideways and build another base, but you can use this high. All right, like if there was put options, if there was options being traded, if we broke this, I would be buying puts on whatever I was long. But that's another example. The market's not even developed to the point where, I mean, I think we're supposed to have some puts out of like Ledger X on the US side, September, October. The market's still developing. That's why we're so bullish. So anyway, you break call it 44.50, 44.50. And then you take out the bands here in this low, you got to play defense. So you just go to the sideline, just raise cash. I think that's kind of this is the 4 hour. I wouldn't say it's a bear market. I would just say it's probably worth playing defense. This is the level I really care about big picture. You can give me bearish if we break 3,600. But as of now, being above these highs, I think 5,000's, that's the path of least resistance. Okay, Declan. Okay, I'm sorry. Oh man, I'm not that quick. Sorry, man. I like that name. All right. What else you guys got? I've been training guys since 6 this morning. In and out of conference calls. I'll just show you guys this. For those of you that are new to me or to these videos or our firm, this is the best way to kind of get involved with us. This is my website. This is our company, jenkinsrm.com. It's free to come into our chat room. It takes 2 seconds. All right. But a little bit about what we do. So we do some training. I have courses available here. I teach my trading model and process. I teach it in the options course, but I also teach some of my call ratio back spreads and some of the stuff we do on the option side. This is my trading course. That's just if you want to watch the videos, if you want to learn on your own. But then we created programs where we have an online live learning environment. We have 2 teams that we trade together. A crypto coin team. You get real-time alerts built into this product. It's a group just dedicated to crypto space, but it's a lot of collaboration there. So a lot of guys coming up with different thoughts on everything from the forks to what's going on with new ICOs. And then this is our prop program here. So we just started this. We have about 10 traders right now that are going through training to get funded, and we trade together every day. So there's details on how to join there. And we do some institutional business. Then there's our crypto coin team. We just started a new podcast, guys, too. If you go to the Bitcoin podcast, there should be a link right there on the site also. We'll probably do our second episode tomorrow or the next day. But this is great value here, guys. You come into the room, it's 99 bucks a month. It's less than cable. I'm putting in trade alerts. We're trading, we're trading, well, here's a look at our positions. Hopefully that shows up. Lost it. There we go. Edge. Why do you give me so much problems? I don't know where I went, guys. We have, this is powerful. I wanted to show this. You guys can see this. I click on this and nothing pops up. I don't get it. Anyway, this is the best way to get involved with that. We have like 12 positions. Every single one of them's in the money. So we're just talking about how we're building into all the different coins we like, when we're taking profit. And then if you want to really learn the model and learn how to trade, this is something you can own for the rest of your life. It really help you trade your own, your own pairs, whether you're trading Forex or if you're trading, your own coins in the digital space. This is the best program going. And then if you want to go the whole next level, there's some mentoring that we do on the coaching side. That's all I got, guys. Click the orange one. Doesn't make any sense. Let's see if I can pull it up one more time. There. So we're Bitcoin, Ripple, Ethereum, Neo, Dash. We've only been trading the space a couple months, but we've already worked into all these positions that are green. That's just tough to do, guys, especially in a market that's this volatile. So we can teach you to do the same. That's what I just encourage you. You can join for $100 a month, but you really want to learn the videos and learn how the whole process from, I lay out all the foundation, 3 pillars of the model: analysis, execution, risk. We go through technical analysis, the difference between that, fundamentals. We talk about cycles, energy, physics, thermodynamics. We talk about psychology of trading on the risk side, cyclical analysis. And then you got to kind of learn to put it all together in a trading plan that works and then just execute on it. Anyway, guys, hope that helps. I'm going to probably sign off with you. I look forward to seeing some of you in the room. Come in the chat room, just message me. I'd love to chat with you. We'll figure out how we can help you, get you started, all that good stuff. Yeah, Declan, we took some profit on OMG also. Yeah. All right, guys, best of luck out there. Great rest of your evening. Talk to you.